Hello, trading has closed on the 10th of October 2023. As always, we'll start with our disclaimer. We'll go over our calls and make some predictions. Just remember, my calls can be wrong. This is my trading plan for tomorrow, October 11th. But my calls can be wrong. Any trade you take is made at your own risk. I'm just about through with my personal business, but I won't be able to follow the market for part of the day next Monday in the morning. Hopefully that'll be the end of it. We'll see. Look for the pattern today with the early low, which is this. Tomorrow should have the early high. We had a target 4304.43. I thought it might fail. We gapped up smartly according to the rules. It kills the call before the open, so it did fail. The time for it to print is off the table, but not the price. That should be seen at some time, just as this target from September 21st ultimately did print 4372.58. We'll cross it off the list. At some point we should see this other number, 4304.43. Just doesn't have to be anytime soon, and it doesn't mean you won't go higher first. In the afternoon, we got an ultimate buy signal. This is the minimum. You don't have to go higher, but almost always you do. We traded fractionally higher than this. And that's really all the pattern calls for, so that's played out. All these moves with the F, those are false moves. The system says they won't stick, and they didn't. Well, here's the count we have. We think we're in either way magenta 5 or black 3 of magenta 3. The move over this red line is one I don't think is going to stick. At some point we should return into the 4320s. It doesn't have to be tomorrow, but that doesn't mean it won't be. It's just a number I think should print at some point. There's a number of things not to like about today's action, but they all get erased. We gap over this high. We had this rally all day long, but you can see we closed under all these highs and even closed under some lows. If we stay there, if that's maintained at tomorrow's open, it's a negative pattern. But that doesn't mean we are going to stay there, because I don't know how we're going to open. So what's the significance of this high? Well, this was the Fibonacci grid I showed a few days ago. When we were down here at the 61.8, we just ignore this spike. We're down here at the 61.8. I said this was the minimum target to go to the 78.6. We went there within a fraction of a point. So that's played out. It's also via low offer resistance. And there's also this trend line that we hit right on the nose. And the rule we all know, when you go in a straight line to a trend line like this, either you gap over the line or the line wins. So if we're not going to gap over that line, which essentially means gapping over today's high, any move over this line tomorrow probably isn't the real thing. It should retrace. So we have strong resistance at this high from the trend line, from the Fibonacci grid. We're under this price to target, the MEJT target, that's support resistance, and we closed under all these highs. So does that mean we have to drop? Well, we don't have to do anything, because if we gap over this high, all that negativity goes away, and that we're not going to know until the open. There is a pattern. You have a rounding top, break through, and then go through the entire pattern and overtake this high practically in a straight line. Unbelievable speed. It doesn't have to play out, but if we gap over this high, and I'm not saying we will or we won't, But if we gap over this high, that pattern is certainly on the table, and you can't rule anything out. That doesn't mean we are going to gap over the high. We're not going to know until tomorrow. It's just not the kind of thing where I would take a position overnight if I ever did. Not without a hedge, that is. Well, Wednesday's pattern has the early high regardless of where we open. Typically it's a rally day with a high in the final hour, but if you fail, it's a straight line drop. There are a number of bearish features from today's trade. Despite the rally, we closed under intraday highs. We rallied to trend line resistance but didn't go through it. There's Fibonacci resistance at the high of day. This rally is going to continue unabated. We need to gap over today's high. And that's not impossible. As the producer price index report comes out before the open, it can be a market mover. Any pullback here, should it occur, presents a buying opportunity in my humble opinion. So either we're going to pull back. I don't know what the response is going to be to the report. Right now it's a bearish pattern. And depending on the response to the report, I would look for lower prices. And we have that target back in the 43.20s. But this has to be maintained for that to work. It's a pattern with the early high. Normally it's a bullish day. And if there's a positive response to the report, we gap over this. I mean, that's overcoming major resistance. And all you have to do is maintain that gap. And nothing stops us from being much higher. So we'll have to see where we open. It's a pattern with the early high. Right now it's negative, but it could all change by the open if we gap over this high. And that's today's call.